Dhiren recommends a growth portfolio for a 35-year-old with a moderate risk appetite and a regular investment pattern. He suggested we allocate 25% in Birla Sun Life Frontline Equity, 25% in DSP BlackRock Top 100, 10% in HDFC Top 200, 10% in DWS Investment Opportunity Regular, 10% in UTI Dividend Yield, 10% in Canara Robeco Income, and 10% in DSP BlackRock Short Term. We invested 10,000 rupees in this portfolio every month starting the 1st of June, and it's so far given us a return of 9,290 rupees. Well, Dave, you've picked 7 funds in this growth portfolio. It's done really well so far. Could you take us through one more time why you've picked 7 funds for this portfolio?
We were actually looking at 2 things. One, allocation, and a modest allocation to a nominal allocation to fixed income, and approaching the equity allocation through relatively stable portfolio and of 2 kinds. You know, some allocation, nearly a third was earmarked to a defensive strategy, you know, a dividend yield or a contra strategy, and nearly 2/3 of the portfolio was tilted to growth. So with that in mind, we built this portfolio, and to our surprise, the conservative, you know, the value allocation of the equity portfolio, UTI Dividend Yield, has proved to be the best performing fund, which was not the idea. We thought that this will actually generate lower return, and it continues to provide far greater stability on the downside.
So you're happy with the way this portfolio has performed so far? You don't want to make any changes, I assume?
No, I think this portfolio has done very well. It's a large cap portfolio. In these times, this portfolio will grow less if market turns around, but it'll protect your portfolio from permanent damage or impairment if we ever see a fall of a very sharp kind in a brief period.
Alright, Dhirendra Kumar, happy with the portfolio that we have. So before we move on, if you weren't able to jot the names down the first time, another look at the funds that Dhirendra Kumar suggests a 35-year-old should be investing in. Remember, these are funds that are meant to give you stability over a period of about 20 years. So the kind of volatility that we are talking about in the stock market today and over the last couple of weeks, this particular portfolio is the one that will protect you from that kind of volatility. It will give you stable, steady returns, and will make sure that your savings and that your life's investments come out safe on the other side. Flashing on your screens right now, the names of the funds in our growth portfolio. And if you have any questions about that portfolio, write to us at ig@etina.tv. We'll send you the list of those funds.